going on, family? It is Sunday, May 10th, and this is your top-down analysis for today, the 10th, through Friday, the 15th. We are already at the middle of the month. This month has flown by. I feel like we've seen so many different things happening last week, structural changes, price shifts. From a technical standpoint, fundamental standpoint, we've seen negotiation talks, hope verbiage, that has put gold back up on the rise. We've seen the buyers defending that 4660 to 4680 zone right in here. Whoops, right in here. And we ended the week with a higher low on the higher time frame for gold. So what we can expect this week? Let's get into it. Before I do, I want to say once again, happy Mother's Day to all the beautiful mothers out there. Whether you be a natural mother, dog mom, cat mom, you are valuable, you are valued, you are loved, you are appreciated. Happy Mother's Day. Enjoy your day. All right, so from an economic standpoint, what can we expect? All right, Monday, May 11th, we've got a red folder for Fed chair nomination vote. Typically, the news drops around that 8:30 mark, 8:30 mark. I do believe that we're going to see a lot of volatility, volume coming into the market for this nomination. Now, the reason being, really quickly, current Fed chair is Powell. Powell's on the way out. The individual that Trump wants in there, his last name is Walsh, don't quote me on it. But from what I've read, he favors a strong dollar. What does that mean for the market? So when the dollar is strong, right, that means your stocks are going up. The Dow Jones, the SPX companies, your AI companies, your blue chip companies such as NVIDIA, Dell, Intel, there's a whole host of them. I mean, on and on. All the tech and AI companies that went crazy last week. I know a few of you guys trade options. You'll see all-time highs, higher highs on all those companies with a strong dollar. Why? Because Americans feel more apt, right, because the economy is stronger. They feel economy is growing. They feel more apt to spend the dollar, spend their money, and place their money in different assets and different companies for growth. Right now, from the flip side is that what does that mean for gold? So historically, whatever happens with the dollar, gold does the opposite. So if dollar goes up, gold comes down. Now, the only caveat to that would be complete dissolution of the war, or at least very, very strong peace talks, negotiations, opening up of the strait once more for good, right? That would mean the demand for oil comes down, the prices start to taper off for oil and energy. That would increase the demand for gold, okay? That would also mean that most likely the central banks would reaffirm gold as the natural safe haven. Okay, right now, and since the start of the war, the US dollar has been the safe haven. So that's one of the reasons, too, why we've continued seeing a spike in the US dollar. But once the war ends, things kind of, resettle, the market recalibrates, we could see the flip side happening where gold is, again, going back up on that parabolic rise. So saying all that to say, this is what you can expect, not saying this week, but in the coming, just giving you guys a little bit of history in terms of fundamentals, okay? This is what you can expect. So let's keep going. Tuesday and Wednesday, we've got CPI core and PPI core. They happen back to back. Thursday, red folder for retail sales. Friday, surprisingly, no red folders. So I really feel like we're going to see more of the volatility towards the start of the week. Okay. All right. Now looking at it from a fundamental standpoint, we've still got a lot going on. I'm not going through this whole article on Bloomberg. Y'all can easily look this up, but we left off Friday with peace talks. U.S. sent something to Iran for peace. Iran sent a response back. Now As of the very latest, Trump has basically said that's not enough. You know, they need to go back to the drawing board. So y'all, you know, again, we're at more impasse. There's still talks between both parties. I do believe that we're going to start seeing an increased wantingness to end the war, however, because it would be in the U.S. best interest to. Why? Number one, it's costing billions and billions of dollars a day. With the oil, with the oil and energy being drained right across the world. That demand is consistently and continuously going up. Somebody has to pay for that. That price has fallen to the consumer. So we're seeing it at the gas pumps, seeing it within the households, our electricity, etc. bill, seeing it even in the grocery stores. Like it's just a trickle down effect. The second thing going into that, we have November midterm elections coming up. Nobody wants, the powers that be do not want to come in there with low ratings. That would be from a consumer standpoint, because again, if your cost of living is going up, but you're not seeing any increase on your jobs, you know, your salary, your rating in terms of who's in power is going to go down. So that all plays a part in the bigger picture. Okay. Again, we'll see more unfolding in this, you know, as this comes about, but this is just what I'm seeing, you know, from a fundamental standpoint. All right. So I gave from looking at the chart, we're on the hour time frame. I gave a midweek analysis. I'm not going to go back through all of that. I will start from Wednesday. So after this big jump from the news on, what was that, Tuesday going into Wednesday, I gave a trade idea with the following TPs. Oh, that TP1 was up here somewhere. Whoops. The TP1 was right around 46. I want to say it was like 46.30. No, not 46. 47.30. Put that back. All right, so we did see some ranging right around in here where we were ranging from that 47.30 to 46.60, 46.80. We never dropped back below that 46.60. So again, buyers defended this area very, very heavily. Didn't quite make it to TP3. We were about 100 pips shy of that, but a lot of you guys did jump in for the buy, made money off your TP1, TP2, collected. Congratulations, you made your profit. And then once we started seeing this equal high on the higher time frame, where we hit that 47.30 and then rejected hard, a lot of you all hopped in that sell, made some money back down to TP, but we ended up landing right at the entry point 46.80. And then on Friday, we saw the exact same thing that happened Thursday again. So she pretty much printed the same move where we're again ranging in this tight area and landing on a higher high, or rather a higher low. Okay, so let's look at what we can expect going into this week. Don't want to hit that one. This one. Here we go. All right, so let me take this off real quick. All right, so from a higher time frame standpoint, from the daily time frame, I talked about this in the chat on Friday, you know, based on how we left off on Friday from the fundamental standpoint. I was expecting more bullish sentiment. I still expect more bullish sentiment. From a major standpoint, technically we are above 4,400. We have consistently defended this 4,500 daily low, making this a major demand level, right? And we landed above this equilibrium mid-range area. So all things considered, we are bullish. Also, if you scale out, this is a clear bullish pennant pattern, with this area being your flagpole And this is where price has consistently came and collected liquidity on both the high and the low areas. So we've had rejection from the highs, but she hasn't broken this this steady continuation up on the rejection from the lows, where again she has just consistently climbed to this area here. Now our neckline with being 4,900, this is where, and this is another major area where we would need to see price either break above, right, break retest and close above our 4,900 in order to see 5,000, potentially, or we could also see another drop. Okay, this is a high area of interest. All right, 4,900 is a high area of interest because both buyers and sellers have consistently defended this area, and we've seen rejection from this area more times than a few. Okay, so we have potential for buyers and sellers. All right, now inside of this pattern on, again, the daily time frame, we see a higher, the double bottom here. So we're seeing this W formation happening. This is what I was talking about in the chat last week. And then from the 4-hour time frame, we see a smaller W happening within the larger one. Okay, this smaller double bottom happening within that larger time frame. All right, or that larger structure. Okay, so like I said, our high here going into the week, we have 47, around 47.65, the low being right around that 4,500. This is that range. Our mid range being 46.30. And as a reminder, you can get to this mid range by grabbing your fibs. This is the quickest way, grabbing your fibs, taking the low, taking it from the low point to the high point, and looking at it from the 50% level. That would be your mid-range. I'm trying to do it one more time to show you guys from here to here, and for right around 46.30, that's your mid-range. Okay, so the mid-range, I always say this, the mid-range, I have that documented because this again is where on the lower time frame we can see where price is, we either have rejection, we see continuous rejection, ranging or consolidating right around this area. If we see that consolidation or that ranging, which is typically what happens, because you can see that happen right in here, we'll either see a breakout to the down or the upside based on larger structure. Okay, so in this case, we saw some ranging. She did come back down, sweep liquidity, but we gathered ourselves right in here with the buyers, and then we saw that breakout to the upside and the continuation. Okay, so now that we are at the 15-minute, we've already established we should be pretty much looking at the buy. Should, again, anything is possible, anything could change based on Trump, based on tweets, but from a overall standpoint, I'm looking at the buys going into this week. So I'm priced to have some, pullback retracement. Why am I looking at the pullback and the retracement before the continuation? Not saying that we don't have a chance to continue up from where we are, which is right at 47.15. I'm looking at the latest tweets that were just dropped. Okay, so I'm going to show you guys this really quickly. SM News. Here we go. All right, so from this, move this real quick. So from the news standpoint, Trump had, like I was telling you, from fundamentals, Iran responded. We're waiting on U.S. to respond. So Trump just basically tweeted, "Hey, this is unacceptable. We don't like it. we don't accept it. So again, that means that more talks are going to be underway. Countries that stayed, blah, blah, blah. Then he talks about the tariffs. So I'm anticipating that we're going to see some pullback before we see continuation up. I really feel like we're going to most likely see her pulling back to, I don't know why that was disconnected. Okay, I feel like we're going to most likely see her pulling back to either our 50%, possibly at 38. We're already at the 23. So if we hold this area from a 15-minute standpoint, right? I'm on the 15-minute time frame. If we hold this area as support, right? We could see some ranging, and then a gap or a gap up. If we hold this area, then we'll likely see her continue up. If not, then I'd be looking at that 38, 46, again, 46.80 to 46, you could say 60, that 50% to the 38. These two areas for possible buy entries, after the liquidity sweep, if we continue down. Okay, so what I am going to do is, since I'm on the 15-minute time frame, I'm going to do a quick little trend line here to show where we are currently. I'm going to take this off. Okay, so quick little trend line, because I want to see how price responds to this trend line. I want to see if we're breaking it, or if we're breaking it to show resistance now, or if we're respecting it to show support. I'm betting that we're going to gap down. We'll see. Okay, so this is our 15-minute trend line. And I'm going to say top right. Okay, so we'll see how we react here and here. And I'm going to draw my card, grab my horizontal ray. I wanted to see how she reacts here. 46.80, we're just going to say 46.80. I like the nice round numbers, 46.80, and do that blue, solid. And then I want to see how we react at the 50%, which is 46.56. Now, typically, I would also mark off that 61, but since that 61 literally falls right in on the 15-minute, it falls right where our mid-range is, which is 46.30. That's already pretty much outlined. So these, again, are the zones that I'm looking at. And if y'all remember, these are pretty much the exact same zones that she played in last week. This is why I say, once you really get to follow price action, or basically you're following the money, you can see how she does the same thing over and over and over again. If 45, I'm just saying some zones. If 45.50 was a strong zone the previous week, more than likely, if we moved up structure, if we've seen buys towards the end of the week, then 45.60, or rather 46.60, is going to be that next zone that she's going to more likely gravitate to. So if 46.30 was the zone last week, and if we moved up structure, 47.30 will likely be the zone that we want to pay attention to for the following week. On the flip side, if 47.30 was where we were last week, and we did primarily, we fell towards or at the end of the week, right? We pretty much traced or pulled back. Then the new zone that we would want to look at and pay attention to would be 46.30. So it is where we typically will see the same thing, or the same zones visited over and over and over again from a technical standpoint. That's why when you start to understand price action, all you're really doing is following the money. The biggest thing, the biggest hurdle when it comes to the charts and the skill is understanding the fundamentals and being on top of what, okay, if this, then this. If this happens, or if this is tweeted, or if this is said, then I can anticipate this over here happening. I should anticipate price action responding, or the market responding in this way. Okay. Those are the biggest things. So I also have, I'm gonna wrap it up because that's enough. I also have my notes for the week. Okay, so just as a recap, week of 5/11 fundamentals from Friday. Again, carrying over into today, Sunday. U.S. Iran still in talks. U.S. has just recently rejected, Trump has recently negotiation response enough. So that's still up in the air. Strait of Hormuz still, is still under conflict. They're still trying to reopen that. Gold is starting to gain support, right, from a technical standpoint, and we're seeing some of that from the central banks starting to pump, that money back into the market. From a weekly standpoint, still respecting the key zones of 4,500 to 4,520. We saw buyers defending that area heavily, left off for higher lows still forming. So if you form higher lows, you got to give a higher high. At some point, she's going to give a higher high. That's just technical analysis. Daily, 4,900 is the neckline. This is where the buyers and the sellers are we're going to see that area being defended a lot heavily, okay, by both buyers and sellers. Major area of resistance. Keep your eye on 4,900. I would put that as an alert. Okay, so I would put your alerts at 4750, 4,900. Also 4680 to 4660. Okay, these are the areas from that we just looked at from the fibs level, 38 and 50. These are the areas that I'm looking at. Should we fall, should we retrace and carry support here at one of these areas? These are the areas I'm looking at for a possible buy up. Okay. Now I'm gonna give this, and then I'm gonna let y'all go because I feel like this has been long. I would like to see her coming to long. Oh, I'm on the wrong area. My bad, y'all. I would like to see her. I'm gonna just give this. I'm gonna give this area as an entry, possibly, because again, and this is not hard and fast. We just got to see how price action acts. We just got to see what price action is talking about. I'm gonna give this area as a possible entry, as another possible entry, that 4660 this time. I would like to see her coming to that same 4830. I'm gonna say 4775 for now. I'm gonna say 4775 as a longer target. So we'll say 4660 is a possible entry price as the lowest entry price, 4630 as the stop, and then we got to stop. We got to, where is it? Stop. Oh, profit. And then 4775 as here. So right above that, right above last week's high. Now I do see possibility of her going higher. I also see the possibility of her gaining support right at that 38. So any one of these variables can change. I'm putting this this setup where if she goes below that 46.30, then I would want to reassess and see if she's coming back down to sweep liquidity before continuing up. So this would be my cutoff point. Okay. So this is a very tentative setup. I still could see her coming as high as 48.30 as a swing. I'm gonna just put it there. All right, just so it's marked and y'all have it. So yeah. All right, so that's what we're looking at for the week. I hope this was helpful. I hope you guys are enjoying your Sunday, and I will see you at the beaches and the banks.